Hey everybody, this is George and welcome back to the show. So we've got a couple of really exciting things to go through because 7.5% interest rate. What in the heck are you talking about? And what do you mean foreclosures are up 45%? You said foreclosures were down and that we had hardly any foreclosures and there was no issue here. And now you're telling us there's a 45% increase in foreclosures? Okay, hold on. Get to that, and it's not what you think. And in fact, it's better. So remember, some people have been kind of laughing about this. Don't forget to smash the subscribe button. Share, like the video, because here's the thing. There's no selling. Guys, if you like it, hey, just know so that it will help the algorithm help others see this so they make a really good decision. That's all good. And the goal at the end of the day, if you can make a better business decision for you and your family or help your friends make a better business decision to that. All right, fair enough. So let's get the show on the road here. So when we look at what's going on, and we take a look at new, which is totally normal because Fridays are a big list date. And of course, as you see, we had some really good, we had a nice little bump in activity, absolutely, without a doubt, desperately need, because we're down to about 1.6, 1.7 months of inventory, which when you think about that's kind of going the wrong way. We need it to be going up. We should be at about 11 to 12,000 homes. And unfortunately, we are not. Here's your, let me get rid of myself since, there you go. You can see the whole chart. There we go. All right. Now, when you look at that, so what we have on the left-hand side of the screen, section, light green is what we call available homes for sale. The dark green, that piece right there, that's the number of homes sold. So you can actually see very clearly that the inventory, and this we went back to 2012, 2013, December of 2012, technically 2013. Because some of the reporting that we're going to see today goes back to 2015, I wanted to show you guys relevance because you can see that over the last, I would say 10 years, we have seen a dwindling inventory, but yet sales, the dark green, is pretty consistent. Now, the highlighted blue section, since I am not in any way, shape, to be an artist in any way, shape, or form, that is to show you your 2020 through 2022, and you can see where the inventory just absolutely just fell apart. And that's why some of the numbers that you are seeing, we have to keep in perspective, okay? And that is super important. When you take a tiny number like 10 and you add 5 to it to 15, well, heck, that's a 50 increase. But that's only 5 homes, which is negligible. Keep that in mind as we are working through some numbers here, because right now, as you can see from our next slide, we only have 6,805 homes. Now, I just said we should be between 14, 15, 16,000 homes. As we get closer to April and May, we should be really at about the 18, 22,000, at least 14 to 16,000 homes. I'm not sure we're going to get there because our sellers are holding off for a variety of, but nonetheless, they're holding off. Okay, so when we take a look at that, you can see that even though we took a little bit of a bump, we're at 78% more inventory year over year. We're at 88% right now. Okay, still again, a small number. When you take a look at what has happened month over month, our numbers are doing really well. Year over year, we're dragging a little bit on sales. Well, interest rates have gone up, a full 1% of what we call a 1 point is 1%. It's gone up a full percent over the last 30 days. And so funny enough, when you come back, right, if we come back to the other slide here, and you take a look at the number appended, where we're at basically 1,260 homes, well, that's still, for every home that's coming on, we're taking off 1.5 homes. Typically, it's one comes on, two comes off, because we were at 13,000 homes in October, and middle October, and we keep drawing that inventory down. And we're not getting enough homes coming back on market. But the buyer confidence, is really struggling. Why? Well, because they're looking at increasing costs, not only for labor, not only as far as prices coming down, but there's a lot of builders. In fact, over the last couple of weeks, when we've been working with one of our clients, has a beautiful piece of property in Bellevue that can be most of the builders, in fact, we contacted 28 different local builders, and they are all holding off. And interestingly enough, many of them, because the value of their projects and the liquidity that a project needs to maintain, some builders have had to bring in cash to a little bit of a debacle with Silicon Valley Bank. Completely different. They compare Washington Mutual. WAMU was just that. The FDIC, that was just flat out just a stupid mistake. Hands down. And in fact, there's very few people that I know that argue that point. Point is, Silicon Valley Bank is a little bit different because that is mostly joint venture money. So like Open Door, you might remember, there's a lot of online companies, like happens to be one of them, right? When you take a $980 million loss in 1 year, that bank is going to feel that, right? They're going to start seeing asset issues. When you have another company like Redfin, right? Redfin has never turned a profit. I don't think they've ever turned. And a lot of these online companies, and including Zoa, which they do make money off of a marketing side, but they stopped all of their iBuyer, internet buyer programs, because they were taking tens of millions of dollars in losses because they were doing goofy things with using their Zestimate. And Zoa now, they're going back and forth saying, hey, Open Door is going to buy properties based on a Zestimate. And I'm sure that's like dumber. Wait a second, estimates already don't work very well. I mean, well, they do. They say that 79% of the time they'll get you within, 5% of a price. Same thing. It's pretty close with Redfin too. But they do say, hey, we've got a 99% accuracy to be within 20% of your home. Okay. So if your house is worth $1 million and they're going to be within 20%, that means there's a $200,000 swing either way. Well, if you're willing to take that risk, I guess that's a great idea. To me, that doesn't seem to make a great idea. So anyway, getting back on track, as we take a look at the solds, we take a look at the pendant, we're drawing down inventory in our market here, which again, we look at single family only. Okay. We do not look at things nationally or here locally. For you to make a decision. You don't care what happens in Texas, and we're going to get into that in a bit here. All right. So when we pop over here, oh, that's a real bummer. Oh, that was a super cool slide. I guess it's not going to work. But let's talk about rates. When we talk about rates, and we've got some folks like Mike. He actually did this one, and it's giving you perspective of rate basically over the last 30 years. Okay. And so when you take a look at interest rates and what the payments are, heck, we are pretty consistent with where we should normally be. In fact, Mike says this. He said, in historical perspective can be tough when mortgage rates have roughly doubled in the last year. Any fixes though, okay, that's a normal, and that's what we saw in the 1990s, through the 2000s. That's 100% accurate. But get a load of this. Mike says one popular loan is that temporary buy down. That's that 2-1 buy down has become really popular because if you refinance before that second year, that interest that was in reserves actually can go as a principal. So, if you're not familiar with the 2-1 buy down, let's say interest rates today for easy numbers is 6%. So the first year then is at 4% for that first year. Then for the second year, it's at 5%. Then the third year through the 30th year, it would be at 6% or par pricing what it is today. Now, if you refinance that out, any prepaid interest that is left over used, that can go as a principal buy down, which is awesome, right? So that is not an uncommon practice. In fact, a couple of weeks ago, you might remember that 70% of the mortgages over. Super interesting. Make sure that you're looking at your different options as to what you want to do. Mike also went on to say, he says, listen, cost of wait, this is super important. This is for a lot of people to pay attention to this, right? Okay. The cost of waiting analysis that showed that waiting to buy a property for one costs the buyer the value of home appreciation, meaning that the home appreciation, as it continues to go up, even if you're waiting for it to come down, you are going to be paying tens of thousands of dollars value of the increase of the appreciation in the home than it would be on just paying a slightly rate. That is super important to understand as you guys are navigating, and as rents, yes, as we said, would keep ticking up. Even though on the whole we saw a 0.9, not 1%, 0.9% reduction in some areas with home value, this appreciation in a lot of areas, more in the urban areas. We are seeing multiple offers. Heck, we were out this morning looking at a house that we know is going to have multiple offers again. Every offer, the 8 that we wrote this last week, all had multiple offers. Every one of them. Why? Because there's a massive pent-up demand still. The only way to control their obligation is to secure that home. And they see values going up, and they see the potential of interest rates being a little more 24. Kind of our prediction. All right. So as we move on, today, 6.73%. And of course, as you can see, it bobbles along. The answer is prediction was last year, if you go back to October, you'll see that we were talking about a 7.5% interest, probably about late spring. And then in fourth quarter, it would probably start coming back down. The feds are going to raise the borrowing rate between banks, HELOCs, credit cards, and car interest rates when you get a loan, raising that 0.5%. Now, feds don't control long-term mortgage rates. That's publicly traded. They absolutely have an effect. And so we're anticipating that unless we get some bad earnings reports, which so far we've had some really good earnings reports considering that trend for the last 5 weeks, this could be a little bit of a concern. If we get a good earnings report, and I know that sounds bad, but if we do, rates are going to definitely bump up. Let's talk about some foreclosures. For some of my lender clients out there, and I'll tell you guys, some of the best financing programs, great opportunities. Qualistar Credit Union is one of my all-time favorites. There's a number of other ones like Boeing Employees Credit Union and Salal and whatnot. But anyway, great companies. Absolutely, you're checking those out. And if you need a recommendation, let us know. We'll fire that off to you. Look at this. U.S. foreclosure activity declines in February, but continues to increase. And that mean, and in fact, funny enough, they're not even talking about us at all. Okay. When they talk about foreclosure numbers increasing by 45%, and the reason we're bringing this to you, we get a lot of questions asked about, hey, are foreclosures a good idea? Listen, there are 49 foreclosures currently today in the Northwest MLS, which is half of Washington. There's one in Longview. There's one in Pasco. There's one in Othello. There's one in Wenatchee. There's 2 in Seattle, which technically aren't 2. The agents made a mistake. There's only 1. So one agent out there not doing their client a very good job. But anyway, we've got one in Marysville. We have one in Longview. You getting the gist of it? There's one in Pacific. One. 49 throughout Washington State is people, all right? So if you're thinking that, oh, I'm going to buy myself a foreclosure and it's going to be awesome. No, because there are so few and our economy is doing so well and continues to do well. Banks do the basics, paint, carpet, and vinyl, and they get it back on the market and they get market value or very close to it. They do not discount foreclosures here. Just saying. All right. We take a look at what are the biggest, hardest hit. Look, you know, you got Texas, California, Florida, New York, and Illinois. Okay. I guess those are the least hit. How's that? Then you have the biggest hits were, again, are still Texas, California, and part of the East Coast and whatnot. It is not us. We didn't even hit that element, right? And in fact, Redfin, when we take a look at some of their metrics, 30-year fix, yep, went up to 6.8 at the fifth straight week. You just heard that. Home buyer demand index. So people who schedule showings with Redfin, they said, you know, hey, you know what? We are actually down 4% from the week earlier. And it's, you know, been pulling back just a little bit. Completely expected. Interest rates have continued northward. However, Google, right? There is home search, search requests, and that national numbers. With that, when we take a look at, let me get rid of myself here. There we go. Touring activity, right? As of March 4th was up 6% from the start of the year compared to 23% of what we saw last. So at the end of the day here, really what you need to understand is, one, our market is doing really well. We do need more sellers to engage and come on the market. All right. With that, we'll have buyers that will compete against your home. Well-priced homes are going off the market in 7 to 10 days. Homes that are overpriced are staying on the market 20, 30, and as long as 57 days. Just remember, for those sellers out there, the more time on market, the fewer dollars you have in your pocket and the lesser negotiating position you have with a prospective buyer, especially if you're dealing with a super competent agent like myself and my team. We work our buns off for our clients. And if we're representing the seller, of course, we do the same thing there. But anyway, be advised. More time on market, less dollars in pocket. Just remember that. All right. If you have any questions, please reach out to us. Love questions. Get back to you within about 30 minutes, except for on Sundays. And with that, remember to subscribe, share, and like this video. It just allows everybody, again, to really, at the end of the day, it just allows them to be able to get information also. And absolutely fabulous weekend. I'll see you guys on the next video. Take care.